Trending south of the border, U.S. federal financial regulators on Capitol Hill testifying before the Senate Banking Committee and the House Financial Services Committee about what led to the collapse of Silicon Valley Bank and Signature Bank. Congressional investigators pushing for answers as the U.S. government tries to shore up the banking sector and prevent more issues in the future. U.S. financial regulators testifying today before the Senate Banking Committee as lawmakers in both chambers of Congress launch formal investigations into what caused the second and third largest bank collapses in U.S. history earlier this month.
The quick collapses of Silicon Valley Bank and Signature Bank were no ordinary failures.
Michael Barr, a top U.S. Federal Reserve official, says the meltdown at SVB started at the top.
This is a textbook case of bank mismanagement.
Barr testified that SVB had been on the Fed's radar since November 2021, when it was cited for interest rate and liquidity risks.
They didn't take the action necessary. They were quite vulnerable to risk, to shocks, and they didn't take the actions necessary.
The bank, he says, collapsed after depositors tried to withdraw $100 billion in a single day, driven by social media and mobile banking.
The bank did not have enough collateral to meet that, and therefore they were not able to actually meet their obligations to pay their depositors over the course of that day, and they were shut down.
While the U.S. government stepped in to guarantee deposits at the two failed banks and set up a facility to help prevent runs at other banks, some lawmakers are demanding regulators take further action to prevent a similar banking crisis in the future.
If it's the regulator's fault, it better be fixed. If it's the regulation fault, it better be fixed.
The congressional investigations into the financial sector's instability come as fears of a recession in the U.S. are mounting.